Can I withdraw from my Roth for 101 degrees Kelvin early without penalty? Have you ever thought about accessing your retirement savings before reaching the age of 59 and a half? It's a common question, especially for those considering early retirement. Let's break down the rules surrounding early withdrawals from a Roth 401k and what you need to know to avoid penalties. First off, it is essential to know that early withdrawals from a Roth 401k can lead to penalties and taxes. However, there are specific guidelines that can help you navigate this situation. To withdraw funds from your Roth 401k without incurring taxes or penalties, you must meet two primary conditions. You need to be at least 59 and a half years old, and your Roth 401k account must have been open for at least 5 years. If you meet these requirements, you can withdraw both your contributions and earnings without any tax or penalty. This is referred to as a qualified distribution. Now, if you are considering withdrawing early, there is a distinction between contributions and earnings. You can withdraw the money you originally contributed to your Roth 401k at any time without facing penalties or taxes. This is because those contributions were made with after-tax dollars. However, if you withdraw earnings before reaching 59 and a half years old and before the 5-year holding period, you will incur a 10% early withdrawal penalty, along with income taxes on the earnings portion. There are exceptions to this early withdrawal penalty. The Internal Revenue Service allows penalty-free withdrawals in certain situations. For example, if you retire or leave your job in the calendar year you turn 55 or later, you may be able to withdraw from your current employer's Roth 401k without facing that 10% penalty. This is known as the Rule of 55. Additionally, if you become disabled, pass away, or face certain hardships, such as medical expenses or college tuition, you may also qualify for penalty-free withdrawals. The Secure 2.0 Act even allows for emergency distributions up to $1,000 per year without penalties, with repayment options available. It is also important to note that Roth 401ks have required minimum distributions starting at age 73. This means you must begin withdrawing a certain amount from your account, which is different from Roth Individual Retirement Accounts. Many retirees choose to roll their Roth 401k into a Roth Individual Retirement Account to avoid these required distributions. From the perspective of banks and credit unions, early withdrawals can disrupt long-term retirement planning. Financial institutions often advise clients to consider early withdrawals only as a last resort due to the penalties and the potential loss of future growth. They can assist you in understanding hardship withdrawal options and help coordinate with plan administrators to facilitate penalty-free exceptions when applicable. In summary, while you can withdraw your contributions from a Roth 401k at any time without penalty, withdrawing earnings early typically results in taxes and a 10% penalty unless you qualify for specific exceptions. Meeting the age and account age requirements allows for penalty-free and tax-free withdrawals, supporting your retirement savings goals.